This is the number one concern. This is a really small chart, but these are concerns regarding cryptocurrency. And on the left here, I don't have any concerns. It's hard to trade. Lost access to the Bitcoin. Worried about cyber attacks. Worried about trusting exchanges. Worried about governments taking it over. And then unstable value is by far the biggest concern regarding Bitcoin and crypto. Yeah, we know that this causes some anxiety out there when these kind of dips happen. Yeah.
Personally, don't want a stable value of Bitcoin, but maybe that's just me.
Well, let's talk a little bit about volatility. MicroStrategy has rebuilt its stock around selling Bitcoin volatility.
Yeah.
And they want to increase volatility so that you get traders buying and selling options, et cetera, get a lot of action on the stock. Why, maybe hear from John or Steven, Brandon, like what do you guys think about volatility in terms of investing? Why could it be good? Why could it be a good thing that Bitcoin's price is volatile right now?
For MicroStrategy specifically, I think they're a unique case where they are attracting pools of capital that like and need volatility. I think that's a little different from whether Bitcoin likes and needs volatility. I think Bitcoin is volatile more so based on the fact that an emerging monetary asset that's relatively not understood is just going to be volatile. But I forget who was it, Alan Farrington or someone. What would it look like if an asset was monetizing from scratch? And it's going to be volatile. So I think Bitcoin's kind of like volatile just based on its nature. MicroStrategy is intentionally using that volatility to attract pools of capital that actually want it and need it, whether it's the convertible bond investors, convertible bond arbitrageurs, preferred stock investors, the options traders, people who want both long and short, selling covered calls, buying covered, buying calls. So yeah, a little bit, the kind of volatility of Bitcoin, I think means different things and it comes from a different place versus the volatility of like MicroStrategy. So yeah, those are just some of the thoughts for me, but I'm sure Steven has something too.
I'll talk about the range, like the range we were stuck in. I think when you have an asset that gets kind of range bound like that, you need volatility to keep going. Like it could be higher or lower, but getting some volatility is how you're going to get the next move and how you're going to move along. And I think like when you're like just trading between 92 and 100K, there's no urgency for anyone to put on a position. There can be people that want to buy, but they're waiting. They're waiting on a sideline. And there's a reality that like sometimes assets need to come down to open up an entry for the next wave of capital to come in. And so I think it's a more constructive way to look at it, that like sometimes you do need a bit of a down move to get the next wave of buyers in.
Volatility is the price we pay for the gains we want.
So volatility also shakes out weak hands, people who don't have conviction, right? Because they'll panic sell into the market, and the people who are buying those big dips when you're down 25% plus, everybody else is scared and lost faith. And they may get out and wait to see what happens or whatever. But that's being bought up by people with conviction. And that kind of sets a new price floor because all that Bitcoin, not all of it, but a lot of it's going into the hands of hodlers who aren't going to be selling it anytime soon. So that's another reason the volatility helps with Bitcoin. You flush out the weekends, build up a base at a lower price, and you're ready to go up next. So
some of this this is not just Bitcoin. Like I forget the number, but Amazon stock has fallen a bunch of times by more than 50%. If you look at how many times it's fallen by more than 25%, that's a significantly larger number. So these statements apply to a lot more than just Bitcoin.
Yeah. Yeah. These big seven, the Mag 7 stocks that really drive the returns in the equity markets, all are volatile as well. They see huge returns, days with huge returns, weeks, months with huge dips, and then they come back up. So it's a similar phenomenon here with Bitcoin.
Yeah, just piggybacking off Brady's comment. On the way down, weak hands are shaken out, and then long-term holders rebuy the supply, and then they are guarding the floor there, so it makes it easier to go up. And on the way up on the volatility, let's be honest, pretty much everyone enters Bitcoin the first time in a raging bull market, and they buy the top.
Yeah.
And yeah, many of those folks leave, but that volatility is what attracts the next wave. And then hopefully we do a good job educating them and they stick around. But I think it's important here to share a PSA around volatility in Bitcoin, more on the personal finance side. because it's very easy to get excited and take on some leverage or manage your family's budget with $0 in reserve. And I think that's a mistake. And so I'm essentially going to argue that you should have an emergency fund. You should have dollars on the sideline. If your goal is long-term accumulation of Bitcoin and you want to hold on to it long-term, you absolutely need some dollars to manage your personal volatility in life. My basement flooded last winter, $15,000, $20,000 to get it repaired. If you don't plan ahead with some dollars on the sideline, then you end up selling Bitcoin at the bottom. Maybe you have unexpected taxes and you have to sell now instead of planning ahead. And don't get over your skis, stay humble, stack sats. And yes, I do recommend some dirty fiat.
And I know you learned that lesson once with the taxes.
I did. I sold a coin embarrassingly around 20K, brings great shame to my family and my future heirs. And I learned my lesson. So don't learn your lesson selling the bottom, learn your lesson by intellectually understanding it.